Hello students and welcome to this third lesson. Today we are going to talk about some of accounting scandals that create false appearance of financial health. It can involve individuals or a group of managers, accountants, and other employees within an organization. These letters are misleading the accounting policy of the company and misrepresenting a company financial statement and documents. Some of them are hidden transaction account important financial matters for the inclusion in the financial statement. So, to start this lesson, we are going to tackle these contents. We are going to see the fraud definition, fraudulent activities in accounting, types of accounting fraud like corporate and tax avoidance, and so on. So let's get started by reading this definition concerning what does mean accounting fraud. Accounting fraud is the intentional manipulation of financial statements in order to create or hide a corporate transaction. It specifically refers to an act of intentionally manipulating a company financial record in order to present a false picture of its financial health. Also, it can include some examples as overstating revenue, understating expenses, hiding debts, and material financial events. Also, they can falsifying the financial documents. Here are some types of accounting fraud. The first type is a corporate fraud. A corporate fraud is the broad category of illegal activity carried out by a company or individuals within it. Here, accounting fraud falls under this umbrella. It also includes insider trading, bribery, money laundering, and so on. The second type is occupational fraud. Occupational fraud is done by employees for personal gain at the expense of their employers. These actions include stealing assets, payroll fraud, and reimbursing for fake or limited expenses. This type of fraud could cross with accounting fraud if financial records are manipulated, but many acts of actional or occupational fraud doesn't involve financial reporting. The third type here is overstating revenue. A company can commit accounting fraud if it overstates its revenue. Suppose company is operating at a loss or not generating enough revenue. In order to cover this situation, the firm might claim to produce more income on a financial statement than in reality. If the company overstates its revenue, it could drive up its share price and create a false image of financial health of a company. The following type is unrecorded expenses. This type is another type of accounting fraud. It occurs when an expenses or set of expenses isn't recorded. This leads to overstating a company net income. The following type is the misstating asset and liabilities. The accounting fraud occurs when a company overstates its assets or understand its liabilities. For example, a company might overstate its assets and not record accurate liabilities that have been incurred but not yet paid, like unpaid wages to some workers, like some taxes or interest expenses. This all can also include pensions and other kind of retirement costs for the retirees. Here are some consequences of the accounting fraud. The first consequence or the first result can be the financial losses. One of the most significant consequences of accounting fraud is the financial losses incurred by both individuals and organizations. When fraud activities are carried out, the financial statements are manipulated to present a false picture of a company's financial health. This can mislead investors, creditors, and other stakeholders, leading them to make uninformed decision based on inaccurate information. The second result, it can be reputational damage. Accounting fraud not only affect the company financial standing, but also damaged its reputation. When we say reputation in Arabic, تعني السمعة. When fraud activities are exposed, it erodes the truth or the trust and confidence that stakeholders, including customers and business partners, have in a company. So this all can lead to a loss of existing clients, difficulty in attracting new customers, and strained relationships between suppliers and other business patterns. The third consequence, it can be the legal consequences. Accounting fraud is a criminal offense and can result in several legal consequences for those involved. Companies found guilty of accounting fraud may be subject to civil lawsuits, which can further drain their financial resources. The following type is the employee consequences. Employee may face layoffs. When we say to be laid off to your office, which means you are going to stop your work. Okay, in Arabic تسريح العملاء. So employees may face layoff, reduced benefits, or even loss of their retirement savings if the fraud leads to financial distress or the bankruptcy. Moreover, employees may suffer reputational harm, making it difficult for them to find a new employment. Another term, we can say they make harm their reputational or their career image. Another consequence here, the market instability. In cases of widespread accounting fraud, the consequences can extend beyond individuals, companies. Large-scale fraud can erode confidence in the financial market as a whole. So it can lead into increase in the market instability. In order to ending this lecture, we are going to say that accounting fraud is like a serious problem that can shatter investor confidence in the market and result in a cost for investors, for employees, and for other stakeholders. As seen in the accounting fraud is like a significant branch of ethical and legal standard in the corporate world. It does far more than a rip off investors, and in order to cut or to reduce from accounting fraud, we should be like working with ethics within our works. So here was the lesson of accounting fraud. I may see you in the next video.